As I recall it, Whatever It Takes was the title of Graham Richardson's memoirs, but Mario Draghi, President of the European Central Bank, has adopted Richo's motto, without attribution, I might add, and the markets love it. The idea that the ECB will rescue Spain has made everyone forget that it needs Germany's support to do that, and that lots of previous grand promises remain unfulfilled in Europe. So there were big gains across Europe and in New York on Friday, although there was a little less enthusiasm in Asia today. Australian shares went up 0.8%, but it was really all about the banks and other high-yielding financials, so it's hard to know whether it was really a risk-on day or risk-off, with investors looking for safe yield. Resources stocks were much more subdued, and Fortescue even went backwards. The Australian dollar has gone back into the mid-104s, and it's above 85 euro cents again. And today's morsel of economic data is new home sales, up 2.8% in June, after decent gains in both May and April, but that was off the lowest base in 11 years in March. Tonight's charts are a bit of good news and bad news. This one, comparing the current Australian bear market with the ones in 1929, 1973, 1980 and 1987, is good news, I think. The longest wait till the All Ordinary started rising again has been 5.5 years, which is what we're up to now. After the 1929 crash, it was back to square by now, and even the brutally long 87 and 73 bears started turning bullish about now. So history is on the side of recovery. But this chart suggests we're not going to do too well in London for gold medals. ANZ has looked at 100 years of data on Australia's gold medal tally and the dollar, and discovered that we only do well when the dollar is low. A bit like manufacturing apparently, and the dollar is now historically high. And that's finance.